Chris Pulver in just a moment. Before we do, we're going to thank our sponsors, make this show possible, and then we're going to be taking a look at some indices and other markets with the one and only Chris Pulver coming in right after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, we are back with, like I said, the one and only Chris Pulver. Hey, Chris, how's it going, man?
It's great, Nick. How are you, man? Happy Monday.
Good. Happy Monday. Chris, the indices pulling back slightly, but a little bit of a pop on the open there from the S&P 500, the NASDAQ down 0.5% here. Chris, I feel like this has just been a rolling story where we see this, and by the afternoon, it's up 0.75%. So we'll see if the dip buyers come back in here today. Again, I actually have a potential setup on the Dow, looking for possible pullbacks here. Edgefinder's got a nice reading on it. COT data looked really strong, which bumped it up a few extra points. And I'm watching the Dow on a pullback here today. What are you watching, Chris? Indices looking interesting to you in any way?
I'm watching everything, Nick. You know that.
I know you are. You're always watching everything. I don't know how you do it.
Yeah. No, the indexes look pretty good. I do have a position running. I took it last Friday. I can share my screen to show you how the setup is. And I was looking at the SPX this morning. Credits weren't great. I did a cover call really quickly on some shares I bought last week on Chewy. They had earnings. I got some naked puts that expired worthless, full profit last week with some out of the money cash secured puts. But this is a trade in the SPY. Here, I saw you're talking to Ivan about this as well. So earnings expirations, expirations for this week, they're done on Thursday. So we have quarterly expirations. We don't have anything on Friday. It's a shortened week with a holiday. So I didn't feel comfortable, putting on trades that were like dirt cheap as far as like doing a debit spread that would expire on Thursday, because maybe this is like a little Fed hangover. Maybe the market's going to take a breather and kind of coast into the Q1 end. But I don't know. I mean, I'd like to think that the indexes get a little bit more exciting to wrap up the quarter. Maybe there's some heavy profit taking, but it's still like we're right in the window of this bullish period where April and May typically pretty bullish. They have the saying sell and may go away. So I don't know if the market really wants to aggressively sell off. And when is this dip that we talked about last week? When is it happening? I don't know. I mean, I still think a correction is likely, but pulling back in the S&P to the Nvidia gap looks farther and farther away now. The DIA, if we pull back 3%, that's manageable, but we're not testing all-time highs. So, I mean, we've stretched enough. Here's some interesting stuff. Do you know how good of a start this year has been since like all-time S&P? Do you have any idea?
Is it like it's got to be like top 5, right? Top 5?
It's top 15 all time.
Okay.
Top 15 all time, but it's top 3 in the last 25 years.
Wow. That's
so
pretty
10,
good.
Right around 10% right out of the gates, first 56 days of trading. Top 3. It was only beat by 2011 and 2019. And 2011, you have to remember, is like right out of the great financial crisis and starting to get that momentum after we bottomed out in 2009. 2019 was the rip off of the big correction that happened in 2018 when the market dumped, 15 to 18% by the end of the year, and then just ripped up with a Fed put, early in 2019. So here we are again, like just a great start. I mean, 15 all time is pretty good. I think I counted today. We're at 17 of 20 candles on the SPY, if I'm not mistaken.
It's
17 to 20 candles bullish. It's still like a crazy run, man.
Yeah, I wouldn't be surprised at all. I've got this seasonality chart pulled up just because you mentioned it.
Yeah.
April, May, June, July. We're expecting, at least in the last, this is a 10-year historical average. Last 10 years, these are solid months. Really, the only kind of suboptimal months in the last 10 years have been around September, October, and so should be interesting to see if it can just continue to rally. Anyways, I think, Chris, one thing to mention too is that while we've had this big run up doesn't mean we have to have a big sell off following.
Correct.
A big run up
Correct.
probably will not be followed by the same big run up again. Like, it's unlikely that we see the same kind of returns repeat themselves. But it's also unlikely that you see a huge reversal of those gains. Like, I think the most likely scenario, again, if you're just looking at seasonality, is for this thing to kind of slowly continue to chug up, maybe slow its pace a little bit. But again, we've had, as you mentioned, a remarkable run up here. If you took November to now, it's just been a monster move on the NASDAQ, on the S&P 500. I mean, take your pick. They've all been just really strong. And while I do think, like I said, probably a little bit of a normalization period coming, still very, very strong. One thing that I was thinking about, Chris, in terms of short-term pullbacks that could be, entries, in my view,
Mm-hmm.
a lot of the good stuff is behind us, right? We don't have a big Fed meeting ahead of us for people to buy the rumor. We don't have, NVIDIA earnings tomorrow. A lot of
Right.
the excitement that really got this market to pump in the last few weeks is behind us. And, by no means is that a bear case, because that's a pretty weak bear case. But in terms of a pullback case, maybe there's just a little bit of a correction, a little bit of a pullback here that could occur. Maybe you get a couple percent back. But again, I'm by no means have shorted any of this rally, and I'm glad that I haven't, because despite me thinking it's been overdone, I've been wrong and wrong again. So waiting for pullbacks on it, and that's all I can do. I've still got oil and gold positions. These are working really well for me, and I'm actually really, even though I've missed on the indices, these commodity trades have just been so consistently working for me. And I've just been, I'm a big believer, Chris, in just sticking with what's working.
Sure.
One of my favorite sayings is the best stock to buy is the one that you might be the one that you already own, right? There's no problem in just adding to winners, building positions. That's just, my approach to this stuff. What else are you watching outside of just the indices?
I have to go through. I'm going to comb the portfolio today. I have some diagonals I want to look to see if I can sell against some of those long calls that I have out for the next, 45 to 60 days. Some are longer, out towards January. I had a dividend play last week with Altria, and so I want to. I mean, there was a big drop. I mean, it was a 98-cent dividend. It's one of the top in the market, so that hurt a little bit as far as. I mean, I took I took the dip as far as that dollar drop. But I also got
Mm,
paid 98 cents a share, which is not too bad. And that's kind of more of a defensive play. I really want to focus on some buying power. And one thing, so you'd mentioned this, you know, doesn't mean we have a big dip. I mean, I'm looking at the charts. I mean, very clean trend lines, very clean floors. And at this point, I mean, for me to say like, oh man, there's some damage being done on the SPY, we'd have to drop all the way back down towards like 507. We'd have to have a 13-point drop on the SPY, which, that's why I said the NVIDIA earnings, as it keeps melting up, those NVIDIA earnings look tougher and tougher to reach, unless it's going to
mm,
be like a nasty snapback. But if we hit those levels, I still like them. I did look at something today. Now, let me get your thoughts on this. So, all this drama on like yields and is the Fed's going to cut, and how this gets priced into like the short end, long end of the curve. Um, TLT, truthfully, to me, looks pretty good for the medium term. I mean, there's going to be risk in this because who knows what's
mm.
going to happen ultimately with the number of cuts this year. What does that do to bond prices? But I wouldn't be surprised if we start to see the 10-year yield like drifting higher, the 20-year yield, kind of staying where it is, but the short term, the 2-year, the 3-month. This is one thing I'm going to be watching closely. If the US, I think it's US 03MY for the 3-month yield. I mean,
Mhm.
this thing's just been kind of pegged at this 5.37 and it hasn't gone anywhere. I do wonder what happens
Mm.
if and when this starts to break. If it breaks, what does that do to the overall kind of like the domino effect of, okay, what happens to the 1 year? What happens to the 3 year? What happens to the 2 year, the 10 year? Does that make sense?
Mm,
Like I will
yeah.
be watching bond yields to see, is there a way to play this? But I think if I just look at the chart, the TLT is the 20+ year bond. Okay, that's just bond
Yep.
prices. So obviously, if the yields go down, I want to see this go up. And part of me thinks that pattern wise, we have a pretty good looking, like Head and Shoulders, pretty good looking. I feel like
Hmm.
Zoolander, pretty good looking. Maybe a Head and Shoulders right in here, and see if we
Yep.
can break that neckline, or a cup and handle where we didn't really have a lot of structure when this thing dropped steeply, but because we created this bottom, this top, maybe this thing just goes sideways right now, the low stays in, and then longer term. And that's the thing is, when I'm saying longer term, I need to think, the next 12 to 24 to 36 months out, if I'm going to consider getting a position on this. And there is absolutely risk in bonds. I mean, people that say like, "Oh, there's no risk in bonds; it's risk free." That's
Oh
not at
yeah.
all true, because if you're holding
Oh,
bonds that
look
are
at
dropping because
2022.
yields
Yeah.
are up, it's crazy. Yeah. And look, what were we
Yeah.
going to say? Look what happened to
2022 was a
Signature
rough
Bank.
start for that.
Yeah, exactly.
Yeah.
And they
Right.
well, but
Chris, I've got
they
a
avoided a
I've
3-year
got a
drawdown.
I've got a
Go ahead.
TLT position on right now.
Do you?
I
Okay.
don't own TLT, but I sold puts on it. I'll show it to you
Okay.
on my screen
Yeah,
really
let's see
quick
it. Let's
here.
see
So TLT, I sold puts on TLT at strike price of 92 here. So let
it.
me
Okay.
show my screen really quick. So $92 strike price on TLT. I mean, I just sold this. I was just trying to capture some of the premium that was happening with all the Fed stuff. I pretty much am kind of like you. Longer term, I wouldn't mind having a little bit of in the portfolio. So for
Yeah.
me, I was like, I'll sell this put, and if things go haywire and bond yields spike incredibly, I'll just pick up some TLT. Didn't happen. So this is another area you've scouted out, another area that I've been hiding while I wait for pullbacks. So I've got TLT. I don't mind potentially selling puts again. I've got a strike price. I'm sorry, an expiration date for this Wednesday. Probably going to expire worthless here on the puts that I've sold, cash secured puts I've sold. So wouldn't mind maybe selling them again and just kind of letting this thing ride for a little bit.
Yeah, I'm looking at my my option chain right now. If I went out for 50 to 60 days, I mean, ideally, the price that I look at is I want something below $83. I'm essentially going to say, look, if I'm going to own TLT in any capacity, let me own it at the lows that we saw back
Mm,
in late 2023. But I don't know if I can get as much premium as I'd like for that. Doesn't mean it's a bad thing, but 83. I mean, I'm getting nothing for that. It's 7 cents. So I'd have to go into, the 85 or 86. I'm looking at like the, maybe a 10 delta or something like that. So $88. If I did that, I'm curious, what'd you get on that? You said 50 cents? Is that what you got for your
50
TLT
cents.
put? Okay.
Yep,
That's
50
a good
cents.
premium, man. That really is. That's a good premium.
Yeah, and it was only for about a week. I mean, the holding or the
Okay.
period was just about a week. But of course, I was taking on that extra premium because of the high expected. The implied volatility was super high because of the
Sure.
Fed meeting.
Sure. Let me see here. Maybe I could probably justify 90 or 89 on my end if I want to get in that way. So $90. If I went out, 53 days, I get 60 cents of credit on that one. That's not bad. Um, but I guess the downside is for me, if I own TLT, it's like, what is the upside potential? I mean, that's one. It's like I look at this.
Mm,
We're talking about a price of 83 up to maybe 109. 83 to
mm,
109. And if I'm in it at 90, let me just see what that number looks like. So I mean, it's certainly not like a growth play, but it would be
right.
pseudo safe if I'm right. That's 22%. I mean, there's maybe better ways to allocate. I'd probably look at some income generation versus owning. But I just want to just point it out, like maybe this bottom is in. We stumble around. We go sideways. It kind of gets boring on bonds, but the good thing is I think boring is good. I mean, it's been like I said last year, that great big rally we had in November that avoided a 3-year drawdown, which has never happened in the history of bonds. So it nearly
Yeah.
avoided that, but now I think that bottom is pretty important to watch, and I don't think we're going to come back and retest it. I think that there's still, for as exciting as the markets are right now and as bullish as they seem, there's still a bunch of investors out there. Think about that transfer of wealth from baby boomers. they don't want to take risk in the stock market. They want their
Right.
4, 5, 6%. If they can get it in a CD or money market instrument, or get it in bonds and be risk free for the next 1, 2 years at a time, and just roll those over. Yes, bond prices and bond yields are going to go down. Bond prices go up over the next, maybe a couple of years. But if you're taking a risk free 5% and the annualized return of the S&P is only 8%, if you're a risk averse investor, you're most likely going to take that bet, right? You're going to take the 5% safe risk free yield versus the opposite, and possibly have, we could go up. Look, man, we can melt up, 30% this year and then have a giant 10, 15, 20% correction on the entire market. So
Sure.
that is one thing. I mean, let's talk about that just for a second. Did we mention this last week? I think I talked about this on Friday with you. I plotted a symmetry move on the SPX all the way up towards 6,000. I look at a fib level up towards the D extension as well. I mean, I don't know if we get to 6,000 this year, but did you notice that I know in the Edge Finder you have the forecasting on some of these instruments. Do you
Hmm.
see that the forecasts are being modified? Like all these investment banks are calling for like 5,400, 5,500 on the SPX, or 550, 540 on the SPY. They're lifting forecasts because they're already behind. I mean,
Yep.
most of the analysts this year expected like a 2 to 3% gain on the S&P. We're already up
Yep.
almost 10%.
Yep.
So they're way
And the
behind.
same thing with like Nvidia, Chris, too. Like Nvidia,
Right.
they keep just like chasing they see the price has already gone up, so they adjust their. And that's the thing about watching analysts. Not to say that they're dummies or anything like that, but they're generally they have a job to do, and they have to like job security wise, they can't be
Sure.
caught like saying like, oh, the S&P is going to have a 2% on a year that the S&P does 15, 20, whatever it does. So
Right.
yeah, kind of interesting. Like I said, I see no current reason, no strong reason to be a bear right now on the stock market. I don't have that, and I can't make something up. Sure, there's always a reason you could be concerned, but for me, it's pullbacks until something changes. I welcome a change, because when it changes, I can start pivoting more into my wheel strategy. But for now, momentum just seems to be king, and until that changes, there's no calling the end of it in my view. So should be interesting to see. Like I said, I've got my commodity trades going as well, so momentum is doing okay on that side as well, and we'll just have to see where that takes me going forward. Chris, I'm gonna leave the stream to you here. I gotta hop off here.
Okay.
Before I do, let me just say to everybody who is watching here with us live, Chris has a wealth of knowledge. He's been doing this for some time, a lot longer than I have even. And I just want to say, if you are newer to a stream with Chris in it, do us a favor here at A1. Make sure to go subscribe to Chris Pulver on his own YouTube channel. He has a Discord channel there. You can find more information about all sorts of good stuff. And again, it is all totally free. This is free value to the community. And Chris volunteers, comes on here to add value to the community. So big shout out to Chris. And Chris, thanks for taking over the show.
Yeah, thanks, Nick. Appreciate it. Have a good
Yep.
day, man.
You too.
Thanks. All right, everybody. I'll post my Discord group before I go today if you want to join in. We had a lot of people jump in live last week, which is awesome to see, and free group chat. I post a blog every Friday with trades I'm in for gains on the stock market, stocks and options, Forex pairs. Last week I posted that right here. So last week I had a couple of robots running 333, 239. I had some gains in my trading room on pound Aussie, pound New Zealand, euro New Zealand. So captured over 1,100 pips last week. Stocks and options. It was a really busy week. I had a ton of positions going. Ended up closing out 192 positions for profit last week. SPX, SPY, XSP, DIA, QQQ, all for profit last week. Took a small butterfly spread on an earnings play for MU that was a loss of 35 cents. So no big deal. That's a drop in the bucket compared to what I gained last week. Cryptocurrencies. I've been focused mostly on the spot price of BTC, but I have been getting into the IBITs, the FBTCs, the BITOs. Now, BITO is not an approved SEC. It's not an ETF that's approved by the SEC. It wasn't one of those 11, but BITO is one. It doesn't actually have cold storage Bitcoin, but it's basically a spot. It's a spot correlation to Bitcoin, but it does allow me to trade options. So BITO is a pro shares that's very common with ETFs in the market. They're a big provider of ETFs. And I've been trading that one for over a year because once it was offered up, there's good market cap, there's good volume, and the fact that I can trade, weekly options is pretty awesome, and that allows me to be a lot more flexible with taking some of these speculative runs and leverage some of those instruments, because that's what options is a leverage instrument. Anyway, so that's my Discord. I'll post that before I go today. And it's been pretty quiet out there today so far. I mean, Mondays are usually a fairly quiet day in the markets, which isn't a surprise. I want to bring up this Nvidia chart because clearly the market just doesn't want to stop going up with Nvidia. But I do think that if we have that's the thing, is like it's March. I mean, what is all of a sudden going to make like April boring? What's going to make May boring? Probably nothing. I mean, in fact, those historically are bullish months. If you looked at what Nick showed on the Edge Finder, like seasonality wise, April and May are bullish months. Even going into April, May, I call this the pre-summer push. If the market's getting through the Fed, I mean, we don't have a Fed discussion now. Okay, we don't have a Fed discussion until May. And even having that discussion in May is going to be a pause. This is the May 1 rate decision, 87.8% probability that the Fed doesn't do anything. So if we got through this Fed this past Wednesday and the market kind of liked what it heard, I don't know what the message would be all of a sudden, unless like when we get into April, which is obviously starting next week, if we see just horrible prints in CPI and PPI and PCE, if we see horrible inflation data where it's like, oh my gosh, this inflation is getting worse, it's not just sticky, but now it's like, oh boy, this might be a problem, then possibly the language changes a little bit. But the Fed isn't going to cut on that, more than likely, right? The Fed is likely not going to cut. So we're going to stay at this pause position. They might try to get the language down a little bit, but at this point, I think that we saw last week, especially, the Fed is not talking down the market. Okay. So if they're not talking down the market, I think April and May continues to be follow the momentum. I mean, the ways that I trade it here's a really easy way. Somebody asked me this morning in my earlier session, hey, is there a strategy I can trade on a 15-minute time frame? If you are a Forex trader or you're a stock trader, I mean, if you're looking for directional plays, look at a, daily time frame, look at a 4-hour time frame, look at a 1-hour time frame. Let me see if I can space these out. So daily, 4-hour, 1-hour, and then go down to something more precise. Go to a 15-minute, go to a 5-minute, and you can absolutely trade in that direction, right? I mean, if you've got dailies up, 4 hours up, 1 hour's up, 15's up, and you want to trade something precise like a 5 or a 1 minute, or just trade that 15-minute, alignments work. When you have momentum, when you have trends, when you have the market has higher highs to reach or lower lows to reach, whatever direction we're trading, alignments work really, really well. So like I said, we're in a time, and I told traders this last week in a couple of sessions that I did. I think we're in a great window from now until probably May to June, where if you just trade what you see, you're probably going to thank yourself, because what you should see on the chart is cooperation. You should see the chart, probably reflecting that the trend that's been established, the drifting, the momentum that's already been established is likely going to stay in motion that way, right? So objects in motion stay in motion is probably one of those things where we've blasted off from that, November rally, that November December rip, and that momentum that's carried into 2024. This thin air stratosphere that we're in right now in the stock market, I don't really know what detracts it. I don't know what derails it, you know? And again, last week would have been like, okay, I'm going to be cautious, like maybe the Fed talks it down, but they didn't. And so I think that's like this new like breath of fresh air where the market's like, okay, the Fed's not going to, throw a blanket over this fire, and now we can run. So again, dips are great. Don't just I mean, I hate buying highs, but we're already at 20 all-time highs for the year. This year we've already made 20 all-time highs, which is on pace for maybe one of the best ever. But obviously we'll see how it goes. And don't think that's super high. We've had some years where I'm trying to think, like 2019 we made like 62 new all-time highs. 2017 we made like 60 or 70 all-time highs. So there's still a long ways to go. But like I said, I think buying dips would be effective. Let's get into some other stuff here. So dollar index, I continue to be a little bit not confused, but like I just think the dollar index is going to be just chop right now, which is unfortunate because I think the pattern is really clean, but the direction is not, right? Like this broadening pattern should mean we're either heading higher or we're heading lower, and we are really stuck right in the middle. And I got kind of caught up in a little bit of a stuck trade. I hung on to my positions, closed out for some small losses. I kind of whipsawed on the dollar basket a little bit, but didn't take a big loss or anything. But I'm looking to see, if the dollar will go somewhere where is that? And so we had this correlation that usually remains pretty strong. If we have risk on in the stock market, we typically see a weaker dollar. And and again, in this window, and right now I'd say this dollar can do it again if we go from this low to this low, and this dollar's trying to make a push lower. I could see the dollar getting weaker with a very, kind of steady risk on environment. If oil continues higher, if gold continues higher, if silver continues higher, if Bitcoin continues higher, if the stock market continues higher, that would likely translate into a lot of evidence to give the dollar a chance to drop. Okay. Now, if the dollar gets stronger, all these positions here, gold, silver, Bitcoin, the markets, they don't go up. They stumble, or they go sideways, or they go down, and then the dollar gains strength. But can you see on my chart here? Right? Can you see on my chart, this broadening pattern, high and low? And we obviously have a lot of support down here at 100. So, I mean, this is the big level that I think the dollar can reach. And if we get up into these highs where we had resistance at 107, same type of thing. Now, last week, something also interesting happened. We had the Bank of Japan raise rates for the first time in over a decade. They came off a negative interest rate territory. They're now sitting at, so the interest rate, so this is BOJ. Let me get this chart up here. So BOJ. So the Bank of Japan, they raised rates. And I'm going to put, how about this? The Bank of Japan is going to love this. They raised rates. So negative 0.1% to now 0 to 0.1%. So they gave it a whopping, maybe a 0.1% raise, maybe a 0.19% raise. They're now in a window between, they're not negative, but they're less than 0.1%. So it is a small raise, but they're off of negative interest rates for the first time in a long time. Now, I thought what was more interesting, the Bank of Japan, and I'm not surprised. I mean, I think a lot of traders out there, a lot of speculators were talking about, oh, when they get off negative interest rates, the market's going to tank, and that's the timing, that's the black swan event. Didn't happen, right? And here's why. And I keep saying this, and every now and then this will start to resonate and stick it when I say it every week. But carry trade is powerful. We have been in a carry trade since January 2023, right? I, as a Forex trader, you as a Forex trader, liquidity providers are passing these interest rates down to brokers, down to us as traders. The carry trade, from what I can experience, is in the market since 2023. So if you're holding dollar yen long, you are getting positive interest rates every single day on that position. If you're holding dollar yen long, you're getting paid to hold that. Okay. If you're Aussie yen long, CAD yen long, euro yen, pound yen, all these interest rates long against the yen, you're making money. You're getting financing charges that are positive for the first time in years. Okay. Also, the Swiss National Bank cut rates. The carry trade is positive, and this is also a risk on environment. So if and this is happening from the biggest pockets in the world, countries, central banks, institutions, multinationals, biggest pockets in the world are borrowing in yen and arbitraging that into anything, like literally anything. Probably the easiest thing would be if you're borrowing yen to invest in US markets, if you're borrowing yen to invest it in the DAX, if you're borrowing yen to put it even into the Nikkei, which is up to fresh highs and all-time highs once again for the first time in 34 years. Pretty crazy stuff, right? So the risk on environment is on. We got plenty of momentum to the upside. There's not a lot detracting or derailing the market. The carry trade, if the carry trade unravels, okay, the carry trade unravels, then yes, that's a risk off environment. And we've seen that. We saw that back in 2007, 2008, the carry trade unraveled. The carry trade back in 2014 unraveled. We saw some very obvious risk off plays during those windows after having multiple years of this carry trade. All right. So to me, this is the threat that's out there over the next probably 12 to 24 months. If and when this carry trade environment unravels and unwinds, then yes, then we'll go to risk off trading. Then we'll see a bigger correction in the stock market. Then we'll see, really technicals showing us kind of bear market conditions. But I don't think that this March switch to positive, barely positive interest rates in the JPY is going to move the market. I don't think that with central banks that are looking to cut now, the Swiss National Bank, right? The SNB cut from 1.75 to 1.5%. So they're cutting. Okay. that now, because they're one of the major banks that have cut prior to the Fed. The Fed's not going to cut maybe until June. Fed speak right now, there's talks of, there's going to be 3 cuts from the Fed this year. I just saw a Fed speaker this morning say we want maybe only 1 cut. I see no more than 1 cut this year. Okay, fine. Either way, they're not going to raise. The Fed is likely not going to raise. Okay. So if the Fed's going to cut and the European Central Bank's going to cut and the Bank of England's going to cut and the Bank of Canada's going to cut, see what I'm saying? Like all these crazy raises we've seen since, COVID and trying to get up to squashing inflation, they're now wanting to start cutting back. They're now wanting to start cut rates. And the market's moving way ahead of this. So all I'm saying is risk on environment right now. The carry trade isn't ready to unwind. I think the market is ignoring a lot of risk out there, a lot of geopoliticals. This is why it shows how powerful this is. Right now, this is easy money in the markets. And this is deep, deep pockets getting easy money. Right. So it's a lot. Like this is more than turning a cruise liner, right? This is a big, big deal where, yes, it's powerful when it stays this way and it's stubborn and it keeps going. We have this risk on environment that stays on for a while. But yes, when it unwinds, it will be ugly, and you will want to make sure that you know how to protect your portfolio and know how to trade risk off. And the good thing is, if you trade Forex, you can trade risk off, right? The yen gets stronger, the dollar gets stronger, the Swiss gets stronger. You have volatility. I mean, Aussie dollar will be a great trade to the downside. Dollar yen will be a great trade to the downside. Yen pairs in general have thousands of pips to make up for these crazy runs they've seen since 2022, but it's not happening yet. Okay, that's my point. So the DXY, I don't know what it's trying to do. It's really, really messy right now. But like I said, the easiest way to analyze this is where I'd like to sell it. This is where I'd love to buy it. And we're sitting right in the middle. And it's being very messy in here over the last couple of weeks. And in fact, I'd say for the last month or so, this is a very sloppy index. So it's difficult to trade. So I'm just kind of waiting on the sidelines to see what's going on. I do have one of my systems trading full auto on the dollar pairs, and it grabbed some profit last week for me, which was nice to see. But I'll see what happens over the next couple months when the idea is trade what you see. Good trends are happening. This pre-summer push is usually a very powerful thing in the Forex market. So I think it's a good position to be looking to be long or short. Just trade what you see. Oil, gold, silver. Okay, oil's up 82.05. This is another thing that might become sticky inflation if oil prices continue to rally. I know that the national gas price average, gas prices, I think if I go AAA gas prices, we are certainly higher than what we have been over the last couple of months. So here's AAA gas prices. Today's average is 353. And let's just go to the regular column here. Current average 357. Okay, look at a week ago, 333. Look at a month ago, 304. Look at a year ago. So it's not quite as bad as it was a year ago, but it's not a month ago either. I mean, that's a big increase, right? Having a 50+% or 50+ cent increase over the last month. I mean, you're noticing at the pump, right? I personally stopped filling up my vehicle. I'm just doing a flat like $50, whatever that gets me around my week. So, I mean, it's annoying. And I mean, you notice it because this is food, this is energy, right? Transportation. We notice this stuff from a day to day as a consumer. But oil prices, I think, are still postured to go pretty solid to the upside. We still have a range. I don't think oil's going, 100 plus. But I talked about, breaking this trend line this year, being bullish on oil, heading back up into these highs around 90 to 95. We'll probably get there. And I think this is also a range that is reasonable to trade. If oil gets up to this level, then we'll probably see some interesting, narratives, and they might jawbone it down. We might see some gluts out there where it starts to, increase supply and decrease demand. We'll find out to lower the prices a little bit. But the good thing is this trajectory looks pretty good to stay in the middle and just be postured bullish until all of a sudden we hit a level where it's like, okay, now, this is a problem with inflation. If oil prices crack $100, then there's going to be problems, right? But if oil prices stay at 85, 90, yeah, the pay at the pump will get a little bit more expensive, but nobody's complaining. We're probably not going to have a war on oil yet. Anyway, but we'll see. But oil looks pretty good. Gold and silver, probably one of my 2 favorite trades right now for kind of the bigger picture. Gold is just super high volatility, all-time highs, pretty exciting stuff. But the reality is, how much time does it take for gold to hit these measured moves? That's what I'm curious on, right? Anton says natural gas similar. I don't know, man. Natural gas is the widowmaker, dude. Be careful on natural gas. NGS. Take a look at this. Nat gas is, I mean, I'd like to say it's like a low risk trade because it certainly is. But man, this has been, if you go to natural gas futures, I think I have a feed on here. If I go to my futures, you go to all, it should be in here for like NGS or NGAS. Yeah, nat gas. So just NG. Let me go to the futures market here. Look at this thing. I mean, I think it begs the idea of like just taking some stabs at it. But the last 12 months, this has been called the Widowmaker. I mean, it's way cheaper, but it just can't find any traction. So, I mean, now that we're back to $1.63, let me see what this futures contract is trading for. If I went out, 60 days on that gas and did a cash secured put, I mean, I kind of want to say like this thing's got to stay. That low is of $1.56. If I did $1.55 or $1.50, so I could do, man, I could just do puts on this for, it's out to 60 days, 64 days, grab $270. I mean, my risk is obviously a lot more. I could probably just spread this to be safe if I did. That risk reward profile is terrible. Um, but it obviously tightens up my buying power quite a bit. So let's see. I don't know. I mean, I think it's worth taking stabs at because you might be asking like, well, how much lower can it go? I don't know, but I don't think anybody expected this type of volatility. And what's likely going to happen is this is probably an environment that if you're trading natural gas, this is the environment where it does this, right? And then at some point, it's gonna fricking rip. But the hard part is right now you see it and it's like you're just early, 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 and it might just paper cut, paper cut. I see the asymmetry. I see the reward to risk is way bigger. But the problem is if we're timing this incorrectly or we're getting just hit out with little paper cut losses because we have to define our risk. I mean, I think this is something I don't want to mess with as far as having high risk and it's just not it's unnecessary. I don't need to take high risk on this. The thing's been in the dumps, you know. I do think that there's good upside potential, but could we go lower? Yeah, we could go lower. And it might take longer to carve out that bottom. But I will say this. If we're taking stabs at it, so be it, but keep the trade sizes, keep the risk very small. And at some point, you'd like to think that this would be ready to rip at some point. Now, I don't know how far. I mean that I don't have a crystal ball, neither do you, right? So we don't know how far out we have to go for this, but I do think that, give this time, we'll have a good opportunity on it somewhere. One thing that's also pretty wild and crazy out there, who remembers lumber prices during COVID? Anybody? Because if you did cocoa, so CC on the futures contract, look at this thing. This is like lumber in 2020. Cocoa prices have gone up 134% since January of what? This year? This is the daily time frame. So since the start of the year, 130%. Cocoa is almost performing as good as Nvidia, almost as good as SMCI. I mean, Cocoa might be might as well be a semiconductor. Does that mean I want to call the top here? No. What is influencing this? A lot of the places that we get our cocoa having lots of droughts, having lots of environmental issues. Supply is super tight. So expect any of those impulsive candy buyers out there, expect that Snickers bar to go up a little bit. You know how they have the gold, the Big Mac index? I feel like they should do the same thing on Snickers at this point with cocoa futures going up the way that it is. Chocolate's going to get way more expensive. So anyway, I'm not calling the top here. I'm just thinking this is a crazy price. This is the one thing in the futures market that is just ripping like crazy. So anyway, whatever. Lumber was nuts. It was lumber was nuts. LBS is the futures. It was lumber. It was random length lumber that I was watching in 2020. LBR. There you go. So let's go back into the crazy COVID times. Did they reprice this whole thing? Oh, you got to be kidding me. Well, that's weird. Let me see if I can find some other lumber cash, lumber futures, lumber. Give me some history, man. That's all I'm looking for. That's weird. Somehow this got changed. I guess that still doesn't show what I'm looking at. I don't know. The instrument got repriced, but It was essentially this. I mean, years and years and years and years, and then just crazy run up and then fall and run up and fall. So it is what it is. But yeah, lumber was nuts. Gold buys, yeah. I mean, I like gold. I do like gold. We're at all-time highs. There's no such thing as a triple top. That's a pretty common saying out there. So we had resistance, we had resistance, we had resistance. Um, you know, there was talks of this being a rising wedge, but it was flat. This is more of an ascending triangle, and it broke above. So all I did, this isn't complicated. I talked about this last week. I just measured this move, right? I mean, if you measure gold right here in that multi-year range, you go halfway. That's why I'm projecting gold to 2270. And if we match this move to symmetry, we go all the way up here towards 2470. So this is profit target 1, this is profit target 2, and I am long on GLD, I am long on gold futures. I'm doing the same thing on silver, which is SLV for me, and silver futures. So I've got them both measured out. I think gold right now has already kind of gotten the head start, and I'm looking to see if silver will follow. Silver can make a nice breakout through $26 if we get it, and hopefully play a little bit of catch up. There's my yellow box right there. So I want to see if silver can break above here and go. Test the highs, hit symmetry around $35. $35 price target on silver, and that would be a wave 3. Wave 1, wave 2, wave 3. Wave 4 is a pause. Wave 5 gets us into 40, like $43, $44. So yeah, there's lots of good upside on silver and gold. And of course, everyone's curious on Bitcoin as well. Bitcoin at 69. I mean, I'd like to see a bigger dip. I was talking about it the last several weeks. If we get a dip to 60,000 to 50,000 in that window, I'm going to buy some more. So I've been leveling into IBIT a little bit. I got a dip around 30. I think I'm probably up in profit right now. So let me see if I go into my positions here. Positions for IBIT. Where are we at? IBIT. Yeah, so I got some exposure. So up around 2,600 bucks on IBIT right now. BITO up around $4,800. So I've got some exposure on those two instruments, and looking good. So that is that. See, Bitcoin we did. Yep, euro dollar. Euro dollar is essentially the inverse of the dollar index, so be careful on this one. Also, another one that's quite confusing. I mean, again, what would I do on euro dollar? Well, based on this swing, I'd be curious to see if the euro dollar heads lower, which would tell me that if I'm correct on that assumption and correct in that direction, the euro dollar goes lower, then that means the dollar index would go higher. But I'm not getting any confirmation on that. If I get rid of my lines here, I mean, we're just kind of stuck. I mean, the dollar index doesn't want to go anywhere. The euro dollar is tough to read. If this is a bit of broadening pattern, like these are great patterns if you're selling high, if you're buying low. But in the middle, it is a constant battle, and the DXY is showing us that right now. So I don't love really any direction on the euro dollar. I don't think you're getting a good directional play. I would say to make this easier, just look at some horizontal support resistance and see if we get a breakout. Keep it simple. Like, I don't want to get stuck in all the noise because we have a bunch of it right now. Right. Some of my favorite trades, I'll give you a little snapshot of in my trading room. So I called these the last couple of weeks. These are some of my favorite plays and directions right now. Aussie CAD, Aussie Swiss, CAD Swiss, bullish. Swiss yen bearish. Euro Swiss, Euro New Zealand, pound Aussie, pound Swiss, pound New Zealand CAD, New Zealand Swiss, and dollar Swiss bullish. Those are directions that I'm going to stick with. Dollar index, you notice that there's very few dollar pairs, right? Dollar Swiss is the only one I'm long in. Every other dollar cross, I'm staying out of. Aussie CAD, New Zealand CAD, I like a lot. I trade those to pivots and pockets and efficiencies all the time. Against the Swiss pair, that positive swap and carry, I am long against the Swiss franc. The Swiss yen, I'm in that just because it was a good technical setup. I'm still in the trade. The Swiss yen is positive, I believe. We're up about 50 pips on it right now. We have an entry around 169, and a stop around 171. If it cooperates, great. If it doesn't, it's a yen cross, and who cares? But I'm trading yen pairs very, very small. But the directions I like are what I just showed you. Okay, dollar yen. Dollar yen. I mean, I'm not joking around here, man. I think that this is an ascending wedge waiting to break out. Like I said, there's no such thing as a triple top. If traders are trying to sell this and say it's at resistance, I don't think that look, I don't think that we have anything below this trend line coming on the dollar yen. That's my personal opinion. I think this is going to be a trade that as we get into this pre-summer push environment, I think that is where we're going. If we break above this 152 high, don't be surprised to see more upside. Now, how high? I don't know. I don't know, right? But even if I get a breakout from, I mean, is it going to be here to there? That could be crazy, but it could be possible. We could see this market just go absolutely gangbusters to the upside, and maybe we push into 160 plus. Which I mean, even going to 160 is 800 pips. But here's what has to happen: if we break above 152 and the BOJ remains silent, it will drift, and it will drift higher. It may not be just crazy trend, but it will likely drift because of that carry trade and positive swap environment you can get for being against the yen. So if I'm a seller, I've got to see wide open confirmation and obvious bearish confirmation. If I'm a buyer, you're already long, or you're waiting to see, can I reestablish some positions, get in long on a break of 152, see if there's bull flags, and some drifting up towards 155, maybe 160. But I like dollar yen long because I think this is just it's testing, and as well as I do that traders are so eager to short this thing, their stop losses are sitting right above 152. And so they get stopped out, opens up those liquidity portals, and off we go. So I think dollar yen's going higher, and I think yen across the board goes higher. Okay, there's my thoughts. So that's really it. I mean, we've got a lot of stuff to digest, but here's what I'll wrap up with today: trade what you see. Right now, we're in an environment where markets risk on. It's ignoring a lot of bad stuff. I'm not a bear. If anything, if I wanted to be defensive, then I'm positioning on other instruments, but I'm not just full on bearish. I showed the trade that I'm in, for these next couple of weeks. I mean, I need about a $7 move. If I get a $7 move from 521, we go to either 531 or we go to 511 over the next 2 weeks of trading. I'm going to make some money on the SPY. So that's what I'm comfortable doing, where it's like, yeah, we could go up higher. Yeah, we could drop and have a correction. If I get the move, I'll get paid. If we have a huge move, I get paid even more. But for me, this is just a safe way to kind of play directionally neutral, get some good volatility, go out a couple of weeks or so, and the market typically delivers on this. Um, April and May, historically bullish. I think this momentum continues. It might not be at the pace we've been going, but I think it's steady and steady and steady, and the dips probably continue to be bought. So if we have dips, they'll probably continue to be bought. If we're just keep stretching, some like one-off day. I mean, I don't know what it's going to be at this point. We have no Fed until May. So it's going to be very quiet. The next kind of down day might be some April CPI print if it's higher. The year over year went up to 3.4. If it goes up to 3.5, 3.6, maybe the market gets a little scared because it's going to make us think that the Fed's going to do something. But I think for right now, just trade what you see. And that's probably the best rule of thumb for the next couple of months is just trade what you see, stick to your alignment, stick to your trends, and follow momentum, because there's lots of it out there. Okay. Tesla. Yep. I'll do the last one here, Tesla, and I'll wrap it up. So Tesla trading at 170. I mean, I will say this: if Tesla gets down to $100, I'm going to be a bull on Tesla. I'm a bull at this point, taking some out of the money credit spreads here that I'm just hanging on to. I think I have some 170s and 165s in here. Let me double check. So I have a 160 by 155 out to April. So it's upside down because the deltas have changed because I got into that when Tesla was trading around 180. So there's a little bit of threat, but for me, my line in the sand is 160. As long as we stay above 160, I get paid on this trade by expiration. So 170 seems to be stabilizing. This is a low around 160, so I know it tested those levels, but I'm watching closely. And realistically, I mean, I think that Tesla from this low, this high, I mean, this could make for a very interesting head and shoulders pattern where if we get a rip to the upside, then yeah, Tesla has a lot of upside potential. But I don't think Tesla's coming to the bullish. If Tesla gets to the bullish forefront, it's not because it's a car company. I think Tesla gets the rip because it's an energy company. I think Tesla gets the rip because it's batteries. It's open source batteries. It's open source technology for better power efficiencies, whatever. Um, Nothing against their cars, but I just feel like Tesla is not. It's not the growth in the car sector. It's going to be something else. So, and I think that's where the speculation came in when Tesla was up to the highs that it was. You know, but just my thoughts. Binary options, good luck. I don't love them. Not for currencies, man. Binary options are tricky. I don't like them. I like equity options. I like index options. I like futures options. I love those actually. But Forex options, binary options. I've not met a trader that does them super successfully, so I stay out of them. Nasdaq on spot business. I don't know what that is. Do you want to go Nasdaq, Nas 100? As far as just pricing. I mean, we're weekly overbought. All-time highs are a pullback away, but I think Nick had this chart up and it's pretty clean. Look, if you don't see the floor breaking, there's no reason to be a bear. I mean, we're definitely overbought. We're definitely overstretched, but all we have to really see is, okay, let's see we go sideways, right? If we go sideways, then yeah, we have a floor, but if that floor gets tested and then rips from there, it's like, I still think buying the dip is the way to play it. If the floor breaks and continues, then we look for a bear flag, and there's some corrections that come back to all-time highs. But look, the trend lines are clean. I'm sitting here staring at overbought conditions on daily and weekly charts. I'm like, man, this thing has to pull back. Well, it should, but if it doesn't, what am I doing trying to force sell trades? So that's why I trade a lot like this. If it goes up, I get paid. If it goes down, I get paid. If it goes nowhere, then there's my risk. But the likelihood of the market moving for a week or two and giving me 5-10 points of one direction, it's pretty high. I mean, that happens almost every single week. So I just trade, All right. I'm gonna let you go. I'm gonna wrap it up there. I've got a trading room to jump into at 11 o'clock for equities on demand. Like I said, I'd share my Discord group, my Discord link. So let me do that here. If you'd like to pop in and join me, so here's a group chat. Add an invite, and I'll make this so it doesn't expire. So you can join, copy, and in the chat, this is my Discord. There you go. So if you click on that link and join, pop right in. We should see you join in the live group chat right here. And like I said, come check out, join the community. It's just trading. Be respectful. No spam. No crazy stuff. Please don't come in and try to impersonate me. I can't believe people do that. Anyway, but every time I go live on YouTube, my blog on Fridays, anything I post on Twitter, any analysis charts that I like, any education, I've got robots, I got strategy guys, I got full video courses from start to finish on a bunch of stuff in Forex, stocks, and options or in trading rooms. Private instruction, I do a lot of private instruction. I reserve those for the weekends typically. Saturdays, I tend to do like 3 or 4 hours. Sundays, I'm willing to do for one-on-ones as well as for groups of 5 or 10. Small groups to make sure that everyone gets the information they need, and then some affiliate links. I've got a promo code for the Edge Finder, as well as some software out there, dynamic trends, and some trading stuff. My broker's Tasty Trade. I work with TD Ameritrade and Schwab. Anyway, all sorts of stuff, and a top weekly pick, which I'm going to do here this afternoon and try to find something good. So everyone popping in here saying hi, nice to have you, and off we go. Okay, thanks a lot for being here today. Thanks A1 Trading for letting me pop in and collaborate as usual. And happy trading, lots of profits. See you again this week. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.